Morning. This is Van with Level8 Trading, here to do our pre-market discussion. We're looking at our key ranges chart here. We've had a significant rundown, sell-off. Started in the Tokyo session, right here. This is Tokyo, or the Asian session. Tokyo opens. They run it up initially a little bit, but then the drop goes. I can't find a news event that goes along with this, but it's just been selling off all night. ES has been selling off with it. So the indexes are both down pretty hard. ES came down to a level that we had drawn a couple of weeks ago there for its pre-market low. Let's go look at scheduled news events. We've got nothing really on the horizon today. There's a PMI kind of flash report that's coming out at 9:45 Eastern. Take a look at that. It has some prices in it, some inflationary or just a general economic news that the market likes to react to. As long as we're here, one interesting thing today is our price. This is SPX gamma exposure. It's based on SPX, obviously. This is pre-market. This is based on the close, yesterday's close after it all cleared. The options market cleared, and we're really close to this gamma flip point after the clearing. Now we're going to see SPX gap down 100 or so points. You can see right here, ES is down 105 points. ES basically is SPX. In the future, so based on the time value of money, it's not a prediction, but SPX is going to gap down. It'll be way under this flip point. With that back here at 70, 73, whatever this thing is here, 73, 70, something like that. The upshot is the way that these dealers start hedging. When they get into negative gamma, they're forced to chase price, and what that means for us is that they will magnify moves. So if this model plays out, we can have a day of really sharp moves up and down once they get going, because the options dealers are in the position where they're chasing price. They're not fading it like they usually are when they're positive gamma. So we're at 142% volume, relative volume right now over the last 15 sessions. ATR is unusually high for this time of the morning. At 18, usually this can be in the single digits. So, we could really see some fireworks here. Starting at the open, it'd probably be too big for me to trade. Much like the crazy ATR when it moves too fast, but it looks like there are some fireworks that could happen here. We're going to find out. We've been looking for this, this correction. I think Goldman came out this morning and said that AI expectations are getting unrealistic. NQ's always been very sensitive to yields, and it's basically just been defying yields. If we look at this 10-year, these 10-year notes here, I'm going to go maximize this sell and put this on a daily. These yields have been rising really since March. Okay, and we've had this steady drumbeat to the upside on NQ. It's just been almost in defiance of it. Now we've gotten kind of toppy up here, and we're starting to see some fluctuation. This is starting to have some confluence with what we're seeing in NQ on a daily basis. But this is just an example of how NQ's had a tremendous run up over these last couple of months, and it is in defiance of these yields rising. This These are these note prices going down, and that means the yields are going up. So there's some tension there, and we're gonna find out today a little bit more about how it wants to handle it. Put that back on 5-minute. Put it back where it belongs. All right, so that's what we're looking at. There's yesterday's volume of profile value area. Obviously, VWAP's fallen out of it now. This is a bearish read. I mean, there's no sugarcoating this one. And the studies that we have are pointing that out in here. It's likely bearish in terms of that structure. The flattening out of it and stuff here, this stuff has just turned it into a no-go on the 5-minute study. We don't have vol ratios yet. We won't have our sector list yet. We certainly would expect the Mag 7 sectors to be leading to the downside today, that being communications, infotech, and consumer discretionary. We'll see how this plays out, but obviously there's no question about leaning to the downside at this point. The only caveat right now is that this is the second day in a row we've seen rates be non-supportive of what we're seeing on the chart. Yesterday we had these treasury prices way down and price was up, and we got what we expected. Now it did run up, and then the bears showed themselves. So I mean, the opposite of that today with this thing turning bullish, but this isn't really. These are essentially flat. Yesterday they were decidedly negative. So we'll see what happens. But really, the yields of the treasuries have not been supportive of this big sell-off. So we're going to see what happens. I think either way we're going to have big movement, big sharp fireworks today. So get ready to find your levels. And I'll be back for post-market, and we'll talk about how it finished. If you guys like this content, please like and subscribe. Visit us at level8trading.com. You can get into Discord and see the tools that we use to trade this, and really, kind of offer you a framework where you can build your own edge. And I'll see you this afternoon.